In the modern economy, control doesn't come from force. It comes from debt, from data, and from the invisible architecture of a financial system designed to keep most people working harder, for less real freedom. This isn't about conspiracy. It's about structure, because somewhere along the way, money stopped being wealth and became a system of obedience. To understand how we got here, we have to go back, not to 2008, not even to 1971, but to the late 17th century. England, a country rebuilding from war, desperate for funds. In 1694, a small group of private financiers founded the Bank of England, the first central bank of its kind. They lent money to the government, but not out of gold. They created paper credit, promises backed by nothing but trust and taxation. For every pound they printed, the nation went deeper into debt, and the bankers earned interest. It was a brilliant invention. Money made from nothing, owed back with something. And from that moment forward, debt became the foundation of modern freedom. The colonies that would later become the United States watched and learned. When the U.S. was born, its founders debated what money should be. Thomas Jefferson warned that banking institutions are more dangerous than standing armies. Alexander Hamilton disagreed. He wanted a strong national bank, modeled after Britain's. Hamilton won, and the young nation began its long, uneasy marriage with credit. By the 1800s, America had expanded west, fueled by cotton, railroads, and speculation, all funded by debt. The Civil War exploded the economy again, and ironically, the fight to end slavery brought a new kind of economic servitude, the national debt, which ballooned to fund the war. By the late 19th century, America's new elite, men like J.P. Morgan, Rockefeller, and Carnegie, realized something powerful. If you control money, you don't need to control people directly. In 1913, everything changed. Congress passed the Federal Reserve Act, giving a new private institution, the Federal Reserve, the power to issue the nation's money. It wasn't fully federal, and it didn't hold much reserve, but it had something far more valuable: authority. For every dollar the government borrowed, the Fed could create credit, and for every dollar created, Americans owed interest. The modern debt machine was born. Over the next century, that machine would grow into something far more powerful than any king or emperor: a global network of banks, corporations, and digital systems that could manufacture scarcity in a world of abundance. This was the moment when slavery went digital. Let's pause for a second. If everyone is in debt, every nation, every corporation, every person, then who is the creditor? The answer is no one, and everyone. Because modern money isn't real. It's a claim, a digital entry on a screen. Since 1971, when President Nixon took the dollar off the gold standard, every U.S. dollar has been backed by nothing but faith and debt. The government borrows money from the Fed. Banks multiply that money through fractional reserve lending, creating more loans than deposits, and citizens spend their entire lives repaying what was never truly lent. We call it earning a living. But in truth, it's a treadmill built from numbers, an elegant form of servitude. Centuries ago, a slave was a body that produced labor for a master. Today, the system doesn't need to own your body. It just needs to own your time. A mortgage binds you for 30 years. Student loans keep you paying for decades. Credit cards promise freedom, but deliver interest. And all of it is wrapped in the language of choice. You're not forced to take a loan. You choose to. But in a world where housing, healthcare, and education depend on access to credit, that choice is an illusion. The system doesn't whip you. It just sends you a monthly statement. When the internet arrived, many thought it would free humanity. Instead, it gave the old system a new weapon: data. Because in the 21st century, money and data are merging into the same thing. Your phone tracks your spending. Your bank monitors your habits. Your digital identity determines whether you're trustworthy, not by character, but by metrics. China's social credit system may seem dystopian, but Western economies have built their own version. Quieter, subtler. Credit scores, targeted ads, algorithmic interest rates. Each screen, each transaction, feeding a profile that predicts what you'll buy, borrow, or believe. In the old world, power was measured in land. In the new one, it's measured in data. and whoever controls the data controls the debt. By 2008, the illusion cracked. The financial crisis revealed that banks had created trillions in fake assets. Debts bundled, sold, and rebundled until no one knew what was real anymore. When the system almost collapsed, governments printed even more money to save it. And, once again, the public paid the price. Homes lost, savings destroyed, jobs gone. But here's the real twist. After 2008, the very banks that caused the crash got even bigger, and central banks doubled down, printing more, inflating markets, deepening inequality. Between 2008 and 2023, the world created over $200 trillion in new debt. And yet, most people feel poorer. How? Because while the top 1% own the assets that rise with inflation, the rest own the debts that rise with interest. It's not failure. It's design. Now we stand at the edge of something new, and possibly final. Central bank digital currencies, CBDCs. Digital dollars that can be tracked, limited, even deactivated. Governments call it modernization. Critics call it programmable control. Imagine a future where every transaction is recorded, every purchase approved or denied based on policy. Where money isn't just earned, it's permissioned. That's the direction we're heading. From slavery of the body, to slavery of the wallet, to slavery of the code. And most people will never notice because it all happens behind the glass of a touchscreen. We live in the richest era in human history. Technology can feed billions, cure diseases, and connect the world instantly. And yet, anxiety, debt, and inequality have never been higher. Why? Because progress built on debt isn't freedom. It's dependency with better graphics. The more connected we become, the more predictable we become. The more predictable we are, the easier we are to control. The system doesn't need to oppress you. It just needs to keep you comfortable enough not to rebel and afraid enough not to stop working. A perfect balance. We've tried reforming it. We've tried regulating banks, forgiving loans, printing stimulus checks, but every fix comes from inside the same logic, that more debt equals more growth. It's like trying to heal a poisoned tree by watering it. The truth is, the system can't be fixed. It can only be replaced. And that's where the new ideas come in. Decentralized finance, Bitcoin, digital gold. But even these face the same question. Can any form of money truly free people if the foundation of value is still control? The modern master doesn't wear a crown. It doesn't have a face. It's the algorithm that sets your loan rate. The app that tells you how much you owe. The bank that owns your data. It doesn't care who you are, only how predictable you are. And every tap, every purchase, every signature feeds the system. Slavery today isn't enforced by violence. It's enforced by design. So yes, slavery still exists. It just speaks the language of economics. It lives in your mortgage, your student loans, your subscription fees, your fear of missing a payment. It is the system that taught you that productivity is morality, that to rest is to fall behind. But here's the truth the system can't touch. You can't enslave a mind that questions. Understanding how money really works is the first step toward reclaiming your time, your real wealth.